All right, welcome back to another AriasWave price action video. When it comes to Bitcoin, we're looking at what could potentially be finally the top of the Wave B, the Wave E of Wave B. So I'm going to talk about this and why it expanded so high. Now, this is definitely a very strange occurrence, but it's not completely out of the ordinary for such a complex pattern to do this. Now, it could be at a top. It might have another go up, but I have a feeling it might be done. Basically, at the highs, we have an area of resistance, right? So it's not just the daily, the 200 period moving average on the daily, which I'll get to in a sec. There's also a series of highs that were made previously that acted as support in this pattern. Sorry, as resistance, right? So as resistance, the reason for that, I believe, is because it's part of a larger Wave B correction, right? So as I mentioned previously, we had a Wave A, an A, B, C, and this was a D, and this is the E, right? I mean, it makes sense because it looks very weak, the way that it kind of went up sideways and up. It's not quite an inverted head and shoulders pattern because we haven't really seen the right inverse shoulder. So it almost appeared that way, but I don't think so. No. So what I think might happen, and this is just my opinion, is that we might see, okay, yes, the wave C completes, has to make a new low just below the last low here, right, just below 74,517, and then it'll bounce, create a wave one, and then I believe it'll come back down for a pretty deep retracement. I think it could happen, and I think after that you might get something like an inverse head and shoulders pattern, which could be traded up in a wave C, right? The wave C, I'm expecting the wave C to come after this low is hit. So this one will be bigger once we get there. So that's a complex wave B scenario, right? It was the last resort when it came to me having to make a call on where this is going, right? Now, I know a lot of people like to talk about a couple of things. One, people like to talk about the falling, the falling trend line break that we got, that this thing was trying to do. Look, I don't like trend line breaks as a form of analysis. I think sometimes they can be okay for, I don't know, scalps and just minor trades, but basically for the long-term pattern, I don't really think it serves as much other than a good way to lose money if you want a fake out, because there usually are fake outs. Because there could be another low put in, another bounce, and then you can play the whole game all over again. It's an ongoing thing that could last forever, and you don't really want to do that. It's not a good strategy, in my opinion. But if we can sort of measure a move from here down to the lows, that's a good thing, right? Nothing wrong with that. I think that it's definitely worthwhile. But at the same time, what happened, the higher this wave got, the longer the wave C had to get, now it has to be, right? Because back here, this was the length of wave A, and we need a similar sized wave C. But because wave E went up so high, it actually has to be longer than wave A now, which is not unusual. But this is sort of what we're going to see, what I believe we're going to see, right? And it's simply going to be a zigzag pattern. That's all, right? At the daily, obviously, we know that there is the daily, the 200 period moving average, right? We hit it. It looks like we're rejecting it. I thought we rejected it on the previous candle, which is why I posted that idea. But I'll explain to you at the smaller degree why that confusion happened, right? Okay. So what happened what's up with this Wave E, right? So how do I label this? For me, it's going to have to be pretty straightforward. 1, 2, 3, 4, and 5. Right, that's how I'm seeing this. Right, assuming we go down from this point right here. Wait, no. Anyway, so the point is that this chop ended up being a wave 4. So it's A, B, C, bloody weird D, E. Very strange D wave indeed. Yeah, I think it was probably because it was at this falling trend line area and the way that it kind of came back to retest it and then shot up. Yeah, amazing. But just a wave E, in my opinion. Impulsive moves don't look this shit choppy, right? It's not usually what they look like. So at this point, I believe the way to confirm that this price will go down is to break the low down here at 87,096. I believe that will confirm the low, the entry into the trade, mainly because of what happened down here on this structure, right? So I'll just quickly come back here and talk about it as to what I believe happened. So on this last wave 5, I do believe what happened, we had a 1, 2, we had a 3, and then we had an expanded B wave, which was the one that came to retest, basically came back to retest the 200 period moving average on the daily chart. So I think what happened, it was a bit of confusion. This was a B wave. Then we had a C wave, right? I thought it was a reversal. This ended up being a D wave. I posted the chart right as this was moving up. And I'm like, oh shit. Well, at least I didn't post the video first. But now I'm sort of seeing, I'm beginning to understand what's going on. But we still have to clear this low down here for this to be accurate at this point. Right, so I believe this was another funky D wave, and then we had a final thrust. The final thrust was another attempt to break above the 200 period moving average, but it got rejected. At the moment, we seem to be sort of still stuck at the highs there, which doesn't necessarily mean much at this point. Could it make another high? It could, but I think for the last move, it kind of was meant to just be like a blow off top. So at this point, it's just a matter of time before we see price continue lower if, it breaks down below all this area, right? 200 period moving average, 1000 period moving average, and the start of the move itself. What else can I say? At this point, there's not much else to say. We need a break below 87,000 before we can really confirm that this is going to start moving lower down towards that low that I spoke about earlier, the 74,517. Right, so that then will potentially be the end of that B wave, which was pretty much a giant nightmare since Trump started jawboning the market. And then we should see a wave C, which I believe will be a short squeeze. And that will definitely break above this trend line, which won't mean anything at that point. And we should also see price bounce fairly high, I believe, in this structure. The only last thing some people talk about in this, what I've seen people talk about when it comes to this pattern, is also the inverse retracement. A lot of people say that, okay, will it go back to 0.618, that sort of thing? I think that maybe C wave would. The move that comes after this, I think C wave will definitely go back to that area. But at this point, I think that we won't really see it because it would invalidate the whole idea that this is a B wave incomplete. All right, because the start of the B wave is just below the 0.618. Right, and like I said, the higher we go up, the longer the C wave has to be. For me, this doesn't make much sense. Right, it's already overextended, and I think it'll be a pretty sharp move down if that's the case. Once we break the 87,000 level to the downside. So aside from that, we just expect to see a whole bunch of choppy price action at the highs here until we break below that level. If we hadn't already make the final high, for a retracement, let's just say the move starts here, which I believe it did. If you're looking for another move up and you're looking at this and you'd be like, okay, you know, is it wave 4? Is it a wave 4? I mean, does wave 4 usually come down to 50%? I think not. I think this should have made a high back here if it was going to make a final high. I think that there's just a lot of chop at this high because of the recent break of that descending trend line. I think that there can be chop at the highs. Look what happened back here. For this C wave to have done that at the beginning there, can you see why it was so choppy at the highs? Because down at the lows, where's wave 4? Right? So all the alternation was skewed to the upside, choppiness at the highs, but then breakdowns, a breakdown lower. So I think something similar will happen here. A little bit of choppiness at the highs and then breakdown lower once people realize that it's run out of steam, it's been rejected by multiple areas of resistance. So that's my idea for this one. Watch out for that 87,000 break, and then your stop should be at the last high to short this all the way down. This is Mike for AriasWave. Thanks for watching.